Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to talk about one of the companies that I own in my portfolio that I kind of feel neglected for a very long time, right? And that company is Visa. Visa reported their earnings recently. I want to look at it. I want to see what I'm going to do with this company because it has gone up quite a bit, but I'm up about 17% right now. So, and they have reported their earnings. So I want to talk about what my plans are for this company, as well as obviously show you the fundamentals of this business. If you like this type of content, please like the video, subscribe to the channel. If you have not joined us on the Patreon account, please do so. That really helps the channel as well. But definitely join us on this channel and like the videos. Right, so first thing I will have done if I were you, if you're looking to invest in this company, you're interested in this, make sure you go to the basically investor section, investor relations section of this company, and understand the latest earnings. You can look at the presentations, you can do the earnings release, you can listen to the webcast if you like to. Okay, I haven't actually listened to the webcast. I've done for other companies, but I haven't done for Visa yet. Okay, but looking at their financials is kind of straightforward. Okay, net revenue here in the United States has actually gone up 11%, which is very good. When it comes to payment volume, which is basically how we judge basically how much this company is growing and so on, that's 10%. Cross-border volume, excluding intra-Europe, basically grew about 32%, and cross-border volume was about 24%. So looking at this, company is growing a lot, and especially here. And this is only happening because if you think about it, after COVID, almost every European country was kind of in a lockdown. And now obviously these countries are open again for business and transactions are taking place, and that's why it grew this much. But I don't think in the next maybe a couple of quarters we will see if this kind of continues to grow as much. Okay, so what I'm going to do now is that's just a kind of summary of that earnings. There's a lot more information in there that you can look at. There's a lot more nice graphs to look at and compare basically what is happening. You can look at the top revenue. Okay, you can look basically the net income from, you can compare it basically with the previous year and so on. So there's a lot of information year to year change, for example, from nominal to a constant and so on. So you've got a lot more information in there that you can look at, liabilities and things like that. But I'm just going to jump into the financials of this company because I don't want to make the video too long. But if you're really interested, have a look at this. Okay, this is really where basically how the company makes money, where they spend their money and so on. It's very interesting to be able to read this information and to be able to understand exactly what basically how the company makes the money. So right, so what we're going to do now is look at the financials of this company. But before I do that, I just want to mention one thing, okay? Looking Morningstar, they have updated their, since basically 26th of April 2023. So they have updated this based on their latest earnings. And they, as you can see here, they talked about the fact that the earnings and the revenue basically increased 11% year over year, 13% on a constant currency basis. Payment volume, obviously they talked about the fact 10% to 12% respectively. So they've actually kind of reiterated what they had previously, basically in terms of, so we says here we will maintain our 229 fair value estimate, which is basically what it's been for the last few weeks, if you think about it, last couple of quarters. And it seems it's about 2% right now premium, basically the stock. Okay, right. So right now it's trading $233 per share. 5-year return, total basic return is 85%, and EPS is basically $7.5 basically. Apologies for it, I'm struggling with my voice a little bit, coming back obviously from work, and yeah, I'm a little bit tired. So market cap basically looking about $477 billion. This definitely has a wide economic moat. This is one of the companies other than MasterCard and this company, right? There's not that many companies that can compete, and this is actually bigger than the MasterCard. $477 billion market cap, and it has a lower beta in comparison, basically less than the overall market. Now when you look at this, you think straight away this company is actually overvalued, right? But when you look at the 5-year average PE, we're looking about 35. Okay, so the current PE is only 31. The forward PE is actually interesting, it's about 27. Basically the sector is about 30. So the technology sector, not financials, the technology sector is actually about that much. Okay, financials is very small, but Price to free cash flow, you're looking at about 30. So it's in line with where it has been over the last few years and where it should basically is in terms of the sector. It's also relative to the sector is actually okay. All right. Again, some people will look at this and say very expensive. Some people will look at this, okay, is there growth in this business? And if it is, then maybe it's worth taking that a bit of a risk. Okay. So dividend is almost non-existent, 0.1, 0.77. Okay, so less than 1%. But the latest increase is actually interesting. It's 20%, and the 5-year growth, basically 5-year growth rate of 18%. And this is one of the reasons why I actually like this business. You get the price appreciation, and they are increasing their dividend actually massively, so double digits, which is quite nice. You get $1.80 for every share of this company that you own, and they have increased that dividend for 14 years. And I think they're going to continue doing this, because when you look at the payout ratio here, okay, of only 22%, which is absolutely amazing. In terms of safety, we're looking at about 99%, so 100% safe if you think about it. Free cash flow here of $18 billion. Okay, this company is a cash machine. Literally, they always have about 15 billion or more free cash flow, which is really good, because that helps the company to buy back their own shares when the shares are cheap, pay you dividends, increase the dividend, and reinvest in the business, and so on. Free cash flow yield of 3.8, which is actually quite nice for us as well. In terms of profitability, this company is absolutely amazing. You've got 50%, okay, of profit margin. You've got operating margins of 63%, return on equity of 45%. Total return in the last 10 years, you're looking at about 19%. Basically, return on invested capital, 28%. 10% return on in terms of the revenue of the last 5 years. Current ratio way above 1, which is nice. Now the estimates for the next year is about 13% growth, growing basically about 13%. Then in the next 5 years, they're expecting about almost 15% every single year, which is really good. Company that's been around for a long time, but it's still growing their earnings about double digits. And this is one of the companies that I don't think, no matter what happens with the recession or whatever, that will be around for a long time. Even if we hit a recession, people will still use their cards to actually make those transactions, and this is how this company makes their money. So it's more or less recession proof, but obviously the less consumers spend, the less this company will make, obviously. But at the same time, it's not gonna completely stop. It's not gonna affect the company massively if you think about it. Okay, like we've already seen the current share price, which is $233 per share, and the fair value according to Simply Wall Street, their fair value is $184, but they are overvalued basically about 26%. That's basically what they're saying. We've already seen Morningstar, and according to TipRank and Seeking Alpha, they're more or less the same. $272 there, $264 here. They're both saying it's about 17% or basically 13% or so upside, and it is a buy according to Seeking Alpha. Okay, now this is one of those companies, because it has a higher PE, because of obviously the massive growth in terms of profitability. It's a great company, and if you are young and you are not worried about the income, because the dividends is almost non-existent, right? This is what you're gonna get for every share of this company that you own. If you are young and you're thinking about the next 5, 10, 15 years, right? This is the company that's growing about 18%, 5-year growth rate of 18%. That doesn't mean it's going to continue doing that. It might decline a little bit if there was a recession and so on, because the past does not tell us what might happen in the future. But this is one of those companies I would definitely be interested, because obviously the growth side of it, the fact that they increase the dividend, they have a wide economic moat, and they will be around for a long time. If you check your pocket, like I've always said to you guys, you probably will find a couple of credit cards that's basically, or even MasterCards, whatever the other cards exist, but you will find a Visa card in your pocket. Okay, in terms of business, it's 100%. So this company does not deal with any riba side of things. Okay, they are just a technology company, making sure these transactions take place and they get their cut, obviously, right? In terms of interest-bearing debt, this is one of the reasons I'm investing in this company. You don't have to worry about interest-bearing debt or interest-bearing securities. Very, very low. They are also buying back their own shares. Okay, they have been buying, and they will continue. I think they said in the earnings call, I can't remember now, but they have said, they also basically mentioned that they will buy back their own shares as well. All right, now looking at Seeking Alpha, as you can see, a year to date is actually up about 13% or so. Last 6 months, about 12%. Just this month is actually about 3-something%. The last 5 days is about 1.7% up. Now, in terms of revenue, let's go into the revenue side of things. Okay, we'll come back to the rest. In terms of revenue, you will see here it's actually growing, right, heading the right direction. In terms of, if we look at annualized earnings per share, is also heading the right direction. So all of these things are absolutely amazing. So let's have a now look at, as you can see, by the way, there's a lot of analysts looking at this company. Strong buy, a buy, a hold, a buy, a buy, a hold, a buy, strong buy, and so on, right? Let's now click ratings. You can see the software they use, Quant, okay, is actually saying it's a hold. It's almost basically a buy towards a buy right now. Seeking Alpha ratings is actually a buy. It's about 4%. And then when you look at the warnings, the Wall Street analyst is actually all basically a buy. As you can see here, 21 people have said it's a strong buy, 9 said a buy, 4 say they hold, and 1 person decided to say strong sell, if you like. Okay, and you can see that as well in here. Right, so the question now is, what am I doing with this company? Like you can tell from my voice, I'm very bullish on this company. And one of the reasons I'm bullish on this company, I'll show you right now in terms of charting, is if you compare the total return of the S&P 500, okay, in the last, let's go with the 10 years, you'll see Visa basically beats almost a double, the 460% in total return in comparison to 213. And if I hold this business for the next 10 years, will this happen? I don't know, okay, but I think it will be closer to this, okay. They will beat the S&P 500. And when you pick individual stocks, you are betting on basically, because if you're not buying an ETF, which is probably easier for newer investors and so on, what you're doing is you're taking a risk, okay, and that's why you always have to buy these companies undervalued and so on, because that you're taking a huge risk, because you could potentially own, obviously for us it will be difficult to own the S&P 500, but you could own Sharia compliant ETFs and just sleep well at night knowing that 1% of that ETF is Visa and you don't have to worry about the whole thing. But if I'm buying a company, if it's not like a dividend play, whatever, right, especially this type of business, I want to make sure that I can get my total returns will be the S&P 500, because otherwise you might as well invest in these ETFs, right? So as you can tell from my voice, I'm definitely bullish on this company. I haven't added to this. I think I added just towards the end of last month. I think I've done some. I used to have 10 shares, so I bought 1.2 shares. And what I'm going to do right now, I've added the £250 for this week. I think I will be adding more anyway this week. By the way, as you can see, I've already invested 1,400 something. And I've got a video coming up in the next couple of days to kind of summarize the buys and the sales. The usual video that we talk about dividends and everything else that I'm doing with the portfolio. So right now, I'm going to put, the market is open right now. So I'm going to put that money into Visa, because I genuinely think this is one of the best companies out there. Although I'm up 17% right now, I'll probably average up. I have some companies that are a little bit down, not a lot, to be honest with you, alhamdulillah, apart from obviously 3M and so on. But I think this company is going to go higher. And right now, what I want to do is buy a little bit, as much as I can here and there. I want to get to at least 20 shares, hopefully before, I don't know, basically August this year, and then see what happens. If it comes back down again, it normally comes down to about 210 and then it goes back up. It actually went to 195 or so not long ago. If the market trade is down, especially this week with the Fed coming out, there's basically Apple reporting, other companies reporting, it might drag the rest of this, basically the S&P 500 or the rest of the stock market with it. If something goes wrong, if the Fed comes out and they're very hawkish and they say, okay, we're going to increase 0.25 and then next one also we're going to increase 2.5, and they don't tell us that, they're going to stop basically hiking all these interest rates, then we are in trouble, okay? And I think this will come down. But either way, if it comes down, I'll be buying more for the cheap price. But for now, I'm comfortable buying this. So I'm gonna send that to the market and see what happens. So I'll probably average up a little bit. Let's see what happens. $217 per share is basically my average right now, okay? 219, so it went up about $2, okay? So I'm still up about 14.5%. So it's fine. Again, you will never time the market, okay? Some days you will buy it when it's high, some days you buy when it's low. But the most important thing that is you have a goal, you have a plan. This is one of the companies I want to own for a very, very long time, okay? and for right now I'm comfortable adding to it, and that's exactly what I've done right now. That's now gone through, and as you can see, I'm now on top, basically 12.5 shares of that company. I hope you enjoy this kind of transparency. Okay, I hope you're enjoying the videos. I hope you're liking what we're doing here. If you are, please join us on the Discord. Okay, talk to brothers and sisters who are like-minded just like yourself, who are having great discussions and so on. Also, to join that, you have to join the Patreon. It's about £4 I think or so. So if you pay that, you get basically 1 month. That way you can actually talk to people, get all these spreadsheets and so on. So there's a lot of benefit by doing that, and obviously it definitely helps me and the channel obviously grow, inshallah, in the right way. Have a wonderful day. Assalamu Alaikum.